At the end of last year, Wall Street players took turns predicting a slowdown after a record haul of more than $250 billion on expectations that the Fed would start cutting interest rates. But 3 months later, that hasn't happened. In fact, economists are reducing the amount of expected rate cuts. So when it comes to net interest income, JPMorgan is set to win big, partly because of its size compared to peers. Expect earnings of about $23 billion in the first quarter. That's almost 7 times more than the industry estimated average. Investment banking has benefited from strength in U.S. equities, debt issuance, and deal making. And again, JPMorgan has the edge with a projected $1.8 billion in fee revenue, up 10% from a year before. Punching above its weight, though, is Bank of America, a rival which is likely to report $1.3 billion from investment banking, up 14% from a year ago. And finally, we'll want to hear any updates about how big banks plan to counter exposure to commercial real estate problems. Wells Fargo is the one to watch here, as its share of CRE lending is the highest versus its largest peers. Bloomberg Intelligence says a 2% write-down to CRE loans would reduce Wells Fargo's 2024 earnings per share by about 13% before accounting for reserves that have already been set aside. I'm Sonali Basak for Bloomberg News.